From San Diego, California, we have Senior Portfolio Manager of Explosive Options, Bob Lang, and also one of our Real Money pros. Next Wednesday, March 13th at 6 p.m., Bob and I team up again for the third time to give you our best ideas in the ag space. We'll take a look at names like Mosaic, Monsanto, Agrium. Bob, give us a little bit of an overview of what you're seeing in the ags right now.
Well, Jill, the ag space has been an incredible opportunity over the last couple of years. Mm-hmm. And what I'm noticing right now, at least from a fundamental and a technical perspective, is that opportunity is yet to play out here in 2013. I think some of the names that we've discussed in the past, names like Mosaic, Agrium, CF Industries, even potash to a lesser extent, are really kind of akin to what I would describe as a room full of dynamite with a wick about ready to be lit, mm-hmm. and all it's waiting for is for that ignition to happen. And once it lights, it's going to be an explosion in price that we
haven't seen in a while. That was our thesis going into the back half of 2012, and as we were looking at the metrics in October and November, the charts weren't that pretty, but the fundamental story, I think the ag space is some of the best in the overall market. Lots of cash, little debt, margins look really good. The global macroeconomic picture is certainly playing out, and we saw that theme continue in 2013. What I find interesting, though, for Q2, Q3, these stocks, just by the virtue of what they are, tend to trade more choppy. So what are some strategies we're going to take a look at?
Well, one of the strategies that I like to look at is using options, and using options in the way of collecting premium. Mm-hmm. And what I like to do is something called selling put spreads. And what that allows me to do is to take in the premium. It's a bullish type play, but take in the premium, and if perhaps I'm wrong, I'm able to actually take in that stock, if I wish, mm-hmm. at a much lower price. So, you know, currently right now, I think many of these stocks in this whole group are undervalued. So if they are undervalued, would I mind not getting the stock at a lower price? Absolutely not.
Right. And I think it's a great strategy right now, because if you take a look at the implied volatility within the ag space, it certainly is higher, trading at about 25–30% relative to the VIX, for example, which is at 13.
That's correct.
So fundamentally, we love these names. They're relatively cheap. If you could potentially own them at a lower price and take in some premium, I think there's a really good opportunity there. Last May, we did a trade on Mosaic, and we used a straddle, where we weren't playing the direction of the stock price. It was more the movement and the volatility. Explain how that works.
Well, basically what a straddle does is you're looking for volatility movement, a big price movement, either to go up or to go down. Mm-hmm. And in this particular case, we would benefit with a very large move on either side, as long as it happens before the option expired. And in this particular case, on the Mosaic, we made money because the stock had gone up quite significantly leading up to that expiration. So, you know, we lost money on the put side, but we made more than enough money on the call side to overcome that cost, and we made some good money on that trade.
Okay, so catch more of our strategies on Wednesday, March 13th at 6 p.m. We're going to take a look at some bullish trades, bearish trades, and teach you how to make money with this.